Now let's just begin the session by the most fundamental question. What is the overall outlook on Indian economy currently? Ananya ma'am, would you like to take a call on this?
Hi. It seems to me that I'm the youngest here. I'd like to give Ajay sir, Purvi ma'am the chance to break open the discussion, and then I can go ahead.
Let's go ahead. Go ahead. That's okay.
Okay, sir,
You are
over
also
to you.
the newest in the room, so go ahead.
Right. I think if we're in a very interesting space when it comes to the investment climate in the country, right? And I'd like to start it by stating the sort of volatility that's there. I think the most striking example currently is what is happening with the Adani Group and the Hindenburg report that's come out, and that's extremely curious, exciting for me, right? To understand that people who have skin in the game can actually influence the Indian stock market so much. And the fact that certain companies have such high weightages in all the indices that are there. So one company and how that is leading to losses across the board, right? Which is to say that this is one example that goes ahead and shows that Indian climate is actually very volatile, and it is driven by certain companies that have huge economic concentration. I think I'd like to start the discussion with that sort of observation.
Purvi ma'am, would you like to add some thoughts on this?
Yeah, hi everyone. Like you have rightly put forth regarding one company having, Ananya, like one company having such a high weightage in actually deciding the momentum. That is a really important thing that is actually influencing the market, and this is something that one needs to look into. This actually makes us think that how are rules being formalized and formulated in the case that like out of nowhere this thing happens. Where were the regulators, first of all, in the case that where were the regulators to actually find this kind of a situation that was actually churning out in our country? So how do we justify this kind of a situation? And moreover, uh, we need to understand that what exactly is the situation in the banking system right now, because a lot of exposure that is being, the bankers are talking about in terms of the exposures that they have put forth in the in that particular company. So that leads to a lot of volatility and a lot of issues that might creep into the system going forth. So that is one aspect. But talking about the economy right now, what I would also like to talk about the current situation and the budget that actually came out, and the geopolitical tensions that has been going on since quite some time now. If I look at US, China, the issues have been going on since 2018, 2019. So there are a lot of things that are happening parallelly. I mean, a lot of things can be taken as a good as good points for the Indian economy, but one needs to understand that India is still an emerging market. It has its dependence and its growth aspects are still connected to how the global economy moves. So one needs to take into consideration what is exactly going on in the world and its repercussions, as well as the benefits that India can draw out from the events that are happening globally.
Sir, would you like to
Thank you.
add something on this?
Yeah, I think great points made by both of the other panelists, and I like to take it into a different direction, more or less. If you look at it, um, notwithstanding these recent blips that we've seen in the last week, where the stock market, because of a single company, has really changed the fortunes of maybe, if not lakhs of investors, at least definitely a few thousand investors who have betted big in terms of that. So I think the other part of the story that we have to really understand is that if you look globally, the world is still optimistic about India. Yeah, this recent blip is there. I don't take away that. But if you see overall, the OECD is actually optimistic that India could become actually second fastest growing economy among the G20 nations. And in 22-23, as it is, right? This year itself, after Saudi Arabia. This is despite that we have, a slowdown in global demand, inflationary pressures, and the monetary policy tightening that's really happening. In spite of that, it's actually seen to be an outperformer. In fact, if you look at Credit Suisse, they've upgraded India from underweight to benchmark for 2023, right? So if sentiments globally, and I'm talking not about a smaller time frame, but a longer time frame, if you look in the last 6 months or so, the overall um, sentiment is actually positive about the Indian economy. And that's my maybe starting.
Okay, sir. So, India, how are they affecting investment opportunities? Purvi, ma'am, would you like to say something on this?
Uh, Given the global situation, taking the global situation into consideration, the global tightening that has been happening, and the issues related to recession that is there in the in the advanced economies, I think India as a destination for investments is better placed compared to the other economies. One reason is, uh, first of all, because of rates have been the central bankers have been tightening rates all across actually, but recently, just a day back, uh, all the three central banks, in just taking ECB aside, all the two other central banks, they have actually showed their intent of reducing the momentum of rate hikes, and there can be a possibility of a pause as well, given the situation that is turning out. So that intent has actually impacted the dollar index as well. With that, what I feel is that amongst all the emerging markets, India India actually stands out in a much better position compared to its growth outlook comparatively. Of course, there are certain issues within our economy as well in terms of production. Those sentiments are high, but the numbers are actually not representing it in the manner as it should be. Like if you look at the IIP numbers, like 3-year CAGR numbers is actually just 2%, which is aligning with our and a similar situation can be seen with the GDP numbers. So what I feel is that our agriculture, the growth of the agricultural sector, as well as the growth of the IIP and the growth of the GDP as a whole, is actually they are merging, and this is not something which we want ourselves to be. So given that situation, that's what I feel is a bit on the negative side. But given the current situation globally, I feel that India is much better placed, given the situation of our reserves that we have, that is quite well placed, as well as our currency has been stable compared to the other emerging markets. So that makes our economy in a much better position. That's
Okay, nice, ma'am. Ananya, ma'am, would you like to say something on this?
Yeah, I'd just like to add on to points brought in by Purvi ma'am and sir, which is that when you're looking at current market trends, I think another thing that's now become relevant is how the budget looked, right? And that's what Purvi ma'am was bringing into consideration. That things like there is a very strong sentiment of how even while certain other economies are struggling, right, that India seems to have a growth potential that's and second, the fact that even the current budget, even though it said that okay, this might be an election budget, every budget in India is an election budget, but that while they're taking care of, while there's so much increase in expenditure, they're also ensuring things like fiscal prudence, right? And when you can ensure that a budget is sound fiscally, I think that also instills a lot of confidence within how the growth trajectory of the economy will be. That's first. And second, in terms of growth potential, right? Encouraging co-op actually come in, enter, invest in our markets. Things like reducing surcharges, etc., would also help encourage that sort of high value investment to come into the country. So I think we must look at the market trends with the current changes as well, and I think that's a positive outlook.
Okay, thank you, ma'am. What are the current key factors to consider when investing in India right now? So, what are your views on this?
So, Shagun, can I interrupt you? I put out a message on chat right now.
Okay, my next question to you is, what are the key factors to consider when investing in India right now?
So it depends on what is the kind of investment you're talking about, right? So are you talking about an investing as a foreign institutional investor? Are you talking about what kind of an investment? Because each of these has different parameters that you really look at. So when you're asking this context of this question, what is the context of the question then?
So, like, what are the parameters you'll set when you'll invest in stock market in India right now?
So you're talking about whom is investing? Indian investors investing in Indian stock market?
Indian investors in Indian stock market.
So I think if you ask me personally, this is my individual opinion, right? I'm not too much into the stock market myself, so I might not be the best person to give you a response to this. But if I look at the potential of the Indian stock market, personally, in my personal opinion, there's a lot of potential that is there. There's going to be an ups and downs. There's going to be volatility. That's obviously goes with the stock market. If the stock market was a sure shot bet that you put in your money and you're going to only double it, or it's going to go up by a certain percentage, then it won't be called the stock market. There will be volatility in the market, but if you look at it from a longer term point of view, I think the Indian stock market ultimately is still undervalued given the potential that India has as a country. So if you ask me personally, is it an opportunity no matter where the Sensex is at or the Nifty is at? I say yes. Obviously, when dips happen like the one that's happening right now, if you are a smart investor and if you have funds available to you at the dips that if you're able to buy, that's always a good strategy to do that. But nevertheless, if you take a longer term view, if you take a 5 year view or a 10 year view, and that's the perspective that you're entering the market right now, I think it's a no brainer. I think it's still a great opportunity. It's still undervalued, and there is a lot of opportunity for growth in the Indian Sensex and the Indian Nifty.
Okay, so now my next question is, what are the major risks associated with investing in India at this time? Like, what are the risks? Ma'am, would you like to say something on this? Ananya, ma'am?
Right. I think so brings in an interesting question, which is that even when you're talking about risks, right? I think specifying the context might actually do even people who are listening to this conversation. It would help them, right, in terms of what is the context. I think the point that Sir was trying to bring was that even while you're considering the decision to invest as a retail investor, I would have a very different point of view. Also have a different degree of risk aversion, right? The risk appetite that I would have is probably different from what institutional investors or hedge funds can actually afford to. And as a retail investor, I can't do that. So that's first. And I think that determines what is the sort of investment parameters I would look at, also the sort of risks that exist and the risks I'm willing to bear. So that is first, right? Just wanted to clarify that sort of context that is there. As far as risks that I think are currently relevant for India, for sure. I mean, I think these are pointers that have already been brought on. I think geopolitics currently can go can shift on either sides for India, right? We know for a fact that the Ukraine Russia war had a huge impact, especially on the banking sector in the country, right? And if you see actually, the day the official news came of Russia invading Ukraine, the highest hit was taken by public sector banks in the country, approximately 30-35% dip on that particular day. So we also know that Indian market is susceptible to the sort of geopolitical changes that are happening in the neighborhood. But again, as sir had also said, if G20, with the G20 presidency, and if that is utilized to our advantage, it could play on the other side also. So I think geopolitics, as well as uh, high economic concentration of certain big corporates, I think these are the most relevant risks from my point of view. But I'm open to also understanding what do the other panelists think about the prevalent risks that are there currently.
Okay, Purvi ma'am, what are your views on this?
Yeah, I just wanted to add on to both my other panelists. So, if we look at historical perspective, when GFC happened, global financial crisis happened, we can see that how the Sensex and the Nifty moved. It actually got hit, and the dip was quite substantial at that time compared to if I'm looking at the US markets. So, but comparatively, if I see this pandemic period as a similar kind of a structural break that happened, like GFC was a structural break, COVID is a structural break that has happened. The fall was not the fall that happened, the fall that we can see in the US markets. We did not see that kind of a substantial fall in the India market. First. Second, right now, recently I crunched some numbers and I realized that right now in the current situation, if I compare Sensex with other Sensex and Nifty with other peer market indices as well as some advanced economies, I realized that currently India is overpriced. Uh, the current PE, for example, current PE for Nifty is around 21. Nifty and Sensex is around 21, 22 times, which is actually, more than, if I take the average of some 24 odd indices and their PEs, if I take the average of the price to earnings ratio for those indices, 24 indices, I found that it is 55%. India is 55% higher. It is costlier, actually. And if I compare it with, for example, China or Japan or US, China is actually discounted, around 21 to 22% discounted. And Japan and US is still much lower than what India is priced in right now. I'll give you another example why I'm saying that India is right now overpriced, is that if we look at the market cap to GDP ratio for US, for example, it is around 130 and percent, and for India it is around 170%. So these numbers actually made me clear my thoughts around what India is like, Indian markets are currently placed in, and I can actually a bit more confidently say that India is a bit overpriced in the current situation. So it becomes difficult for investors in the current situation to see to come to India market, for example, because right now if we see that majority of the investments that are done is by the domestic players and not the foreign players. So that is one of the risks currently that I feel is being faced by the India market.
Okay, ma'am, thank you. Now, the next question I would like to ask to Ajay sir. What is the current state of the Indian real estate market and how is it a good time to invest in it? Sir, you're not audible.
Sorry, I was muted off. Yeah, so I was just
Okay.
saying that the Indian real estate market is something which is a perennial favorite, right? Just like it's a perennial favorite among Indian investors, so is the Indian real estate. But traditionally, Indian real estate market actually, to split it into maybe three parts, right? One is people consuming for themselves, right? The houses that they buy and stuff like that. Then there is the secondary layer where you have high net worth individuals who really invest into properties, right? More from appreciation value or for that rental return kind of a yield. And the third category are again institutional players, right? Who are creating capacity and creating assets out of real estate, right? So these are three different areas. So I think primarily, if you look at it, the boom that you had in the way that real estate market boomed for the first category, right? I don't think we are going to see that kind of a boom, but that doesn't really impact anything because people are buying for their own consumption. We are not really buying from. In India, you don't really flip houses like the way that they do in the US, right? That's a very common practice there. So in India, we don't see it. I mean, out of hundreds of people or thousands of people, hardly there is a very small percentage of people who do that because a lot of people consume. That means they stay in the same houses. So I think that is a demand that will continue growing because at the end of the day, that's a requirement, right? As per capita incomes keep increasing, as individual household incomes keep increasing, people will want to move into bigger houses and whatever, move into houses, buy houses. There are new categories of people coming in. So that's a segment that will continue growing. Is that a segment when you say should you invest or not invest? It doesn't make a difference because you're doing it for consumption, right, in the first place. So it comes to the second and the third category, the retail or the commercial, let's call it, because that's where you have the third category and a large part of the second category also there. There are people who invest in residential properties also for rental yield or appreciation. That's going to really get the benefit in the longer run. But if you look at it in terms of the commercial market or the retail, all of these segments, I mean, even though there will be a glut in some geographies or some cities per se or some localities per se, but there is enough potential because tier 2 town, tier 3 towns, there is going to be enough potential that keeps growing as India grows. The demand for consumer products, the demand for retail brands to expand to these locations will continue to be a driver of the commercial real estate in the sense of the term. In the larger cities, the commercial is dominated by office spaces and stuff like that. In the tier 2 and the tier 3 towns, it is dominated by retail, more or less, right? So I think this is something that we'll continue seeing as growth goes. And from that point of view, like I said, there will be times when the supply and demand will not necessarily match. And those are the points of time where you see the opportunity prices going up. But if you look at developers per se, because of the amount of development that keeps happening, I don't see a situation where the supply is under the demand, right? So I think we'll always be in a situation where supply is either meeting or taking in the demand. So which means that you don't really see an appreciation, the capital appreciation on real estate happening, whether it's a commercial, whether it is retail in the same fashion that had happened in the past. But will yields be there on commercial rental values or retail rental values? Yes, you'll continue seeing that. And which, because of the depressed state, in terms of because of the interest rates today at a lows of about 6% and 7% today, that still becomes an attractive proposition. At a point of time when interest rates were at 14-15%, real estate landed up jumping that. But even today's point of view, I don't see that. So that's my outlook on the real estate market per se.
Thank you so much, sir. Purvi ma'am, would you like to add something on this?
Very nice point, so you have raised, and the comparison that you did with when the real estate, I mean, the rates were so high at that time, the demand was still substantial, and right now the situation has not been the similar case right now. The other point that I want to add in is regarding, I would like to add the global flavor, and then I would want to link it to the domestic situation. Globally, what we had noticed during COVID and the post, just the period, following the COVID time. So what we realized that the real estate prices boomed because of, first of all, higher savings, lower rates, and the demand was quite substantial. Also, the wages were rising substantially. That actually gave an impetus to the real estate, the demand for the real estate globally. Real estate prices were like quite substantial. Similarly, the rates of the rental properties were very high. Right now, what we are noticing globally is that the demand for the real estate and the prices of the real estate is tipping. So a similar kind of a situation, I would say, that actually happened. The tipping point that we see right now was a similar case that what was last noticed in 2006, before the subprime crisis happened. So what I feel is, right now, since there was a substantial rise in the real estate prices globally, it has to fall to basically, when I say fall, it has to correct. The real estate prices has to correct globally. So when i when I said that I would want to connect it with the domestic market, I meant is that domestically the situation is still on the better side. We don't see we did not experience a similar spike in the real estate prices compared to the UK, Europe, or the US. So our prices never rose. That the rise in prices was not as substantial as it happened globally. So we would not see that kind of a correction here, but we would see some kind of a correction. Of course, because of the like we have been noticing that globally the layoffs are happening. We are not witnessing that kind of a situation here, so we are in a much better place when we compare ourselves with the global peers. So that kind of a sentiment is not prevalent in India. So we would still see a continuous demand both from the retail as well as the the commercial sector. But commercial sector, there is another sentiment that is right now going. COVID actually led employees to work from home. Right now, companies are adopting different kinds of methods in terms of work. Some of the companies are also considering that they would start off with hybrid. When I say hybrid, I meant where they are setting up offices in every other city, where they can plan to come down and meet once a week or twice a week, so that people do not have to travel all the way, for example, from Bihar to Mumbai, for example. So that is something that can be a boost to the demand for the real estate of the commercial market. So that's what I feel the domestic situation can be or turn out to be. Thank you.
Okay, ma'am, thank you. Now, the next question I would like to ask: what impact does geopolitical tensions have on investment in India? Ananya, ma'am, would you like to say something on this?
I think it's sort of circular to the responses we've already been giving. I think it's pretty established that the sort of impact that geopolitics has on investment climate is huge, especially what given where India is placed and given the sort of increasing power that India is going to have, both in terms of economics, in terms of the sort of strategic position that it holds, and the fact that over the last few years, even the sort of diplomatic power that India has gained or concentrated. So I think by this point, we've pretty much established that geopolitics is huge, and it's something that we have to be cautious about, and also constantly um, constantly keep a check on of what is the direction that India's geopolitical interests are going, what are decisions that are being taken.
Okay, ma'am. Now, the next question is: how does the current state of Indian rupee impact investment decisions in the country? Sir, would you like to say something on this? Sir, you're not audible.
I think it's a force of habit to mute yourself when you're in an online meeting. So yeah, I was just saying that I think the Indian rupee has seen a constant slide, which has going in spite of whatever else is there. I mean, there are many multiple reasons for that as it is. So let's not go into that reasons. But does that affect investments into India? Now you have to look at it in the context of how that. right now, right? If you see that in absolute monetary value, really speaking, when the Indian rupee slides, what really happens? Somebody who's bringing in money into India, right? What happens to the money? Their value, actually, they're getting better value for what they're buying into, isn't it? So, in a smaller sense of the term, in a very, very small sense, it's actually in that sense beneficial. Let's call it like that, right? But at the other end of the spectrum, does it work out to our advantage? Not necessarily so, because at the end of the day, uh, this slide shows that the impact that the Indian currency has, or the impact that we have on global trade, or the import export ratios that we have, right? That is what is the impact, the factor that are impacting it. So it definitely doesn't help. A stronger currency is obviously an asset to an economy like ours, and this is something which I think we have been struggling with. The RBI and the government has been, like I said, futile attempts, let's call it, if anything else, to be able to correct it. But I think the downward slide still continues and is expected to even go on as we speak. And those are my quick views. I think the other panelists can share their views also.
Purvi ma'am, would you like to add something on
Uh, I think Ajay sir has already covered the most important aspect, that rupee has been sliding since a long time now, and a sliding rupee is of course not beneficial for I would say investment purposes, because that breaks the credibility, first of all. And second, of course, there is some slight benefit to the exports, but that would not also sustain, because again the question of credibility comes into picture. That is one of the major concerns. Right now dollar has been weakening, but we can see that the impact of dollar weakening, when what happens is when dollar weakens, then the rupee, immediate impact is that rupee should strengthen, but we can see that rupee has not been strengthening. Rupee has been on the similar scale what it was. So major correction has happened, not yet has happened in the rupee, on the rupee front. So what I feel is that rupee would be under pressure. RBI has been working tooth and nail to balance it. Of course, it would not speak about it balancing, but we can actually see that a lot of balancing act is under play from the RBI's front as well. When one of the indicators were, of course, the forex reserves. At one point of time, it was following. Recently, it has seen some uptick on the forex reserve collection, but of course, that is something that can be strained if the concerns of this geopolitical tension continues to remain, then dollar would definitely be the since US is the hub of it gives the investors a sense of optimism. So the dollar becomes the currency, reserve currency for the investments. So it would have an impact on the rupee as well. So rupee would remain under strain, and it would not be much of a, I would say, I would not be surprised if even rupee touches 85 this year. So that can be a situation.
Speaking of the investment opportunities in the country, how does Indian government economic policy affect it? Ananya ma'am, what are your views on this?
I mean, one thing to understand here is that none of these decisions are taken in isolation, right? So this entire discussion of what are parameters to look at while you're deciding where to invest, the risks that are existing, all of these are also impacted by what are the sort of government's economic policies, right? You need to understand that I think it's all circular in nature. It also feeds into the decisions that are taken. So in terms of your question, I think what we see is, and what my understanding is, and I'll bring back the budget is that we can see a huge investment in the sort of capital expenditure that the government is doing. We also see a huge push in terms of the sort of digital infrastructure that the government wants to build. I think the third thing is that there's a huge potential in terms of the startup culture that is growing. So these are areas where I've personally seen and have been noticing that there's a lot of investment potential that's there, and that the government policy works in tandem to encouraging investment potential, providing that sort of ease of business within these particular areas to ensure that this sort of circularity is maintained.
So, what are your views on this?
So I will not necessarily say that government policy is any of my strengths per se. So Purvi, if you want to add to that.
So government policies actually impact a lot because that shows the intent of how how open is government to on a lot of fronts. So that intent needs to be shown actually, and it's not just the intent that matters. Intent is there, but what about its implementation? So implementation and intent has to go hand in hand to actually build that kind of a confidence in the circular economy that we have been talking about. So that actually has a lot of impact on both the investment front as well as in terms of the growth that we want for our economy to be at.
Okay. Now, my next question is, what is your overall advice for those considering investing in India at this time? Purvi ma'am, what will be your advice to them?
I think this question would be a bit difficult for me to answer because advice, as in, since we are in a volatile world right now, it is very difficult to even judge at the very moment what exactly would happen, how things would pan out, given every day new things are churning out. For example, just a day before, Ukraine had asked US to put some sanctions on China and India for importing oil from Russia. So these things keep on happening. The other event that happened, that the announcement of this. The a balloon that was noticed in the sanctity of the US economy, borderland actually. So these events, if they keeps on happening, it would be very difficult to even understand how things would pan out. And of course, one of the major things that one needs to understand is that how our country is placed compared to the other economies in terms of both financials as well as the social and economic factors are taken into consideration. And moreover, like I had mentioned, intent and implementation are the two major thing that one needs to understand to actually understand the political standpoint in terms of investments. Thank you.
Ananya ma'am, what will be your advice to them who are thinking of investing in India right now?
First off, I don't think I have the qualifications to make any sort of investment advice, right? So I think it should be taken with a pinch of salt. Um, Secondly, I think more than advice, what I'd like to just recommend is um, to be cautious of the sort of, let's say, sectors that you consider investing in. There are, of course, certain sectors that are more volatile to the sort of risks that we've discussed, whereas there are certain sectors that you can take a view on. So I think that is the sort of thing to consider. I think another thing to consider would be that have clarity with respect to the sort of risks that you're willing to take, and have that sort of understanding of what is your risk appetite And if you do have considerable risk appetite and the capital to invest, I think, as sir has also mentioned, that the outlook in the long run for the Indian markets do look positive. But I think there are terms and conditions to that sort of outlook in gaining from the direction that the markets would go in. So that would be my advice per se.
So, what will be your advice to them?
I think I'll give it at an 40,000 feet kind of a level and say that, India is unique, India is different. A lot of FIIs or Western investors try to look at and try, I mean, okay, let's not call it professional investors or financial institutions, but a lot of other investors, they try to look at India in the lenses that they are used to. They try to see that, okay, China achieved this kind of a growth. Can India? I think India is unique. India is very different from China. China had a solid dictatorship that could really drive that completely in the direction that they wanted to, right? With whatever policies that they wanted to. India is far more complex. I think one of the biggest problem in India is like this is we are a collective federalism, right? Something like that, where actually each state and as we go along, if you really look at it, there are about 10 states that really drive most of the GDP of this country right now. Now, what will really happen in the longer run that India will evolve in a different fashion. I think the only element of advice that I can give to people is the same way that do not try to use the same benchmarks that other countries in the world grew by. India is unique. India is different. The That's part A. That India will grow in a different fashion. There will be false starts. There will be mistakes. There will be challenges that we'll have along the way. But one thing is inevitable that as a country we will grow. I think that's a fact that is still there. The challenge that really comes across now, how do we translate this potential into reality? And that will depend upon many factors, obviously. Government policy, the global socio-economic environment, a lot of other variables will start entering the picture, which makes the outcome very complex. But there are underlying strengths that will still remain. The economic, the age dividend that we have, the benefit of the fact that as a burgeoning population, uh, upskilling that population, if that challenge we are able to work through, then we can become the workforce for the world. So obviously it will depend upon, do other countries open up their borders, right? Do the other countries let, like you see countries like Japan, a lot of these other countries which are seriously challenged in terms of workers and workforces. Now, it's only the Middle East that typically a lot of Indian, you know, talent pool goes out. I mean, besides US and all for IT and technology per se, but there are opportunities that go beyond that. If you look at, you know, the hospitals industry or the medical industry, and there are so many other areas where you can go beyond the doctors to nurses, right? There are skilled tradesmen in so many other areas. So there's a lot of opportunity. Now, over a period of time, this has to evolve into reality in the same way, like Purvi rightly said, that the intent might be there, but there's a big gap there. But the gap will get fulfilled because I think one of the unique elements of India as a country will that we'll figure out the way. It's not going to stymie us. It's not going to hold us back. I think that entrepreneurial spirit of this country is far far more powerful, and it is continuing to grow. It is continuing to build. When a lot of the newer popular age groups like you are coming through, you've not seen the shortages and the challenges that your parents saw, because of which your optimism, your enthusiasm for doing things is very different right now. When I grew up, we had to stand in line to even buy milk in the morning, right? Bread was in short supply. If you had to buy a two-wheeler, you had to book it and wait for 7 years, literally, right? I mean, those are the situations that I saw when I grew up. But that's not something that you see when you've grown up. So you not come with the scarcity mentality, and that is a very powerful igniter of growth, right? And that is the dividend that will really yield as time goes by. And in my opinion, that is what will be the force that will really change this country over a period of time. It's not easy. There is a long way to go, but I think we still have all the fundamental things in place which will help us to get there. That's my opinion. And that is what is the perspective that any foreign investors wanting to look at India, or any investors wanting to look at India, I think they should keep this at the central uh, part of their thesis when they look at India.
Thank you, sir. So by now we have come to the end of the session, and I would like to thank all of my panelists for taking out time from their busy schedule and joining this session. Thank you, sir. Thank you, ma'am. Thank you so much for joining this session.
Thank you. Thank you,
Thank you.
everyone.
See you.